because of two things. One, we are still developing, and that makes it a big challenge for us, Lindy, to expand as quickly as we would want to see and to do things the way that we would like to see. I mean, the most important thing within financial services is transparency, meeting regulation, and making sure that things are clear and cut to the throat so that people can actually translate it much easier. And we have not been, unfortunately, great in those part of aspects. Apart from South Africa, perhaps maybe you can look at a few companies and say they've done relatively well, but to the rest of the African continent, it hasn't been that way. The second reason why we're struggling is because most of Africa, I know it sounds crazy, but most of Africa is still a cash-based environment where people still put money under their mattress to save, and people still put money in the Bible to save, and they don't necessarily believe in putting money in the bank. And so financial services, the reason why it's called financial services is because it's a service that administers the way you control your money by putting it in a safe place, hopefully that you know that you can go and always have a look at a statement and go back. And that's why it's services, because it shows that they're particularly interested in making sure that your money is served to its right purposes, or rather to whatever controls you have, but it stays in a safe place. But Africans as a whole, Lindy, still don't believe in that concept.
But now, tell us, Clive, what are some of the hurdles in terms that the sector faces in terms of creating a broader access to financial services?
I think as we grow and we mature, we're starting to see signs that are very positive in the likes of countries like Nigeria, Kenya. You look at Ghana, you look at the Ivory Coast. You can see some pockets of interest in putting there. The main reason why it's difficult for this to actually take implementation, it's simply because of the fact that we still use a lot of cash in our hands, and that's not easy to let go of. And we can, you know, at the end of the month, if you had cash in your hands, it'd be very difficult for you to make sure that you pay all your debts and make sure that things are actually being run smoothly. And so we still have that culture still deep inside our hearts, because we don't trust banks, because they get blown apart or they go bankrupt, and then we don't trust that our money is safe there. But the culture is changing slowly, and I'm hoping that the companies that are there, that are established, can influence the penetration that is required for them to actually start seeing a lot of difference in the next future.
Now, Clive, let's talk liberalization of that sector. What does that really mean, and is it necessarily a good thing?
Liberalization of this particular sector goes back to culture, goes back to practice, goes back to application, and making sure that people understand the services that they're getting and the cost implications of that particular service that they're receiving. And the most important one is the fact that they must understand the different types of products that are being sold by these financial services providers. Because if you don't have the correct knowledge, you'll make the wrong decisions. Let's not be product driven, let's be service driven. I always tell the guys, because we are in the same sector as well. And so what tends to happen is that people actually buy into things not because they need them, but because they've been pushed to sell. So it becomes a grudge purchase rather than something that is required by one. So let's try and educate the consumer. Let's try and build a relationship with the consumer so the consumer can feel much easier to relate their problem, their issues to you. And you don't just become a lending house and to borrow money, but you become a house where there's comfort, there's clarity, and there's instruction of how to actually build products that service that. Let's not drive the product, because the product can mislead us, Lindy. If you go into a bank and they say, and you say, I've got a 500,000 rand, what do I do with it? If the sales manager has told the guys that they must sell a certain product, that's what will sell, and not necessarily what your requirements are, what you need, and how to meet those particular demands rather than what the company needs.
So tell us, though, what does the continent need to do in order to catch up with other developing nations, or developed nations rather, in terms of growing the financial services sector and also ensuring that it works to the benefit of the individuals, not necessarily the banks themselves?
What we need to have is a situation where people trust the bank more than anything else, which has already started. I would say in South Africa, at least, it has already started. We see people rely so much on bank products and what they provide, which is very important. But they don't understand that in the financial services, we include other products that can help them maintain their wealth much longer, that can actually be more effective. life. So one needs to actually start educating and empowering themselves so that they can get an understanding of how you actually do that. I'll give you an example. In America, there's what we call family banking. You know, family banking, from your very last born to the very oldest in the family, they know that there's a banker who holds key to their wealth. They understand every product within that wealth magazine and how the products are actually utilized to enhance them. I'll give you an example I love using. The Johnson & Johnson family. The research was done on them. You know the Johnson & Johnson, the baby stuff, you know, the baby oil and all that nice things that smell so nice. They were actually evaluated. Now, since their great-grandfather, who started with the Johnson & Johnson brand, passed away, that family has been wealthy since. They will not stop being wealthy until the 33rd generation, if they were to stop working today. So you see how wealth can be built over a long period of time? We have to stop as Africans to think inside the box. We need to go outside the box, because what happens now is our people open puzzle shops and they open little stalls. And those stalls, when they die with them. The business doesn't continue because there's no contingency plan. Who takes over the business from now? If you have a good, strong banking partner, if you've got somebody that can advise you and show you where you have to go, who show you where your money, where your profits are, you've got a good standing and you can build your family and build a legacy to last forever.
Now, Clive, though, just one last thing, though. I mean, are old-fashioned Africans who stash their money underneath their mattresses really completely wrong for doing so? Because, I mean, the recession has shown us that banks do fall apart, that sometimes banks can't be trusted, that they will manipulate individuals in order to make, you know, their own profits for their own selfish needs, really.
I'm going to sound a bit biased here and say you need a financial advisor. Because I'm in that same business as well. That's what we run as an institution. But I want to also say that there is no way, if you've gotten into the right education and knowledge, that you can make those kind of mistakes. A number of clients, I can talk from personal experience, that went through the 2008 saga when they were educated and they understood that this is short term, it's going to be short lived. Despite you looking like you've lost 30-40% of your portfolio, this will go up again once the recession is over. So it's a simple something like that the relationship with your client that allows you to actually understand these things. So we need more of these insurers, more of these investment banks, more of these people educating our people. They're not doing enough. And they're always happy to have their money, but they're not doing enough to actually educate the consumer so that they understand the predicaments that are there, that understand the inconveniences that can take place with the wrong investments and what the results of that can be in the future. If you can actually do that to the accurate, most closest amount of times to your consumer and that they understand it, you are standing to make sure that Africa builds on another level. And we can see that with the likes of Diamond Bank in Nigeria. They're doing exceptionally well because the consumer understands the products of which they're selling. And I'm hoping we can achieve the same.
Know more. eNCA.com